What's good, YouTube? Channel FX back, bro. I'm back again. Told you I wasn't gonna leave you. For y'all who don't know why I'm here to put you on game. Like I always say, here to put you on game, man. And before we dive into this video, I just wanna let you all know I appreciate you for the support, especially the comments, man. I really appreciate you all. So with that being said, let's just get to business. Taking a look at GBP USD or Great Britain Pound United States Dollar. Alright, what's the first thing we need to do? We're on the H4. What's the first thing we need to do? Somebody tell me, please, because I've always said this in my previous videos. First thing first, what's the first thing we need to do? You have 5 seconds. 1, 2, 3, 4, 5. Good. We first need to identify the trend. I've always said this. We first need to identify our trend. And looking at our charts, what trend are we in? We're in an uptrend. How do we know we're in an uptrend? Because we can see a series of higher highs and higher lows being formed. Okay, you can see a series of higher highs and higher lows being formed. If I'm to zoom out, we can still see we are in an uptrend because this was the last lower high price created. Okay, and after price created this last lower high, it got broken by this higher high, okay, which then became a higher low, continued with a higher high, a higher low, a higher high, a higher low, a higher high. Okay, so today what I'm going to teach you guys is about how to catch the continuation of a trend. Alright, so after price created this higher high, what happened? Created a new higher low. Okay, after price created this higher low, what happened? Created a new higher high. Alright, after price created this new higher high, what did I do? This previous higher high became our new resistance. Okay, that's where we are expecting price to retrace back into. So after price broke and created this new higher high, all what I did was to take my rectangle tool and draw right across from point A to point B. Alright, and wait for price to come back and retest as a support and continue the trend. Alright, let me go over again. So I said after price created this higher high, what did price do? It came back and created a new higher low. After this new higher low was created, what did it do? It went ahead and created a new higher high. Okay, after this higher high was created, what did I do next? Since this was our previous higher low, this became our new resistance. This was the point where we're expecting price to retrace to continue the trend. Okay, so all what I did was to take my rectangle tool and draw across, mark this point as a resistance. Okay, remember this higher high was serving as a resistance. Okay, so all what we're waiting for was for price to come back and retest the resistance as a support. Okay, we were waiting for price to come back and retest the resistance or this previous higher high as a support, which will create a new higher low. Okay, good. So after price came back to retest the resistance as a support, what did I do? I moved to a lower time frame for my entry. I repeat, after price comes back to retest our previous higher high, okay, which is serving as our resistance, as a support, What did I do? I go back to my lower time frame, which is the 1 hour time frame. All right, good. So coming to the 1 hour time frame, what did I see price do? We realized after price broke above our resistance or our previous H4 higher high, what did it do? It created a new higher low on the H4. This becomes our new H1 higher low. Okay, this becomes our new H1 higher low. What did price do? It created a new H1 higher low before it finally created the higher high. Do you get me? I repeat, after price broke above our resistance, which is our previous H4 higher high, what did it do? It came down and created a new H1 higher low before it finally created the higher high. Okay, so after we seen this, what did we do next? We waited for price to break or to close below this H4's higher low. Okay, we wait for price to close below the H4's higher low, which also serves as a break of structure. When that happens, it means price has broken structure on the H1 time frame. The fact that price has broken structure on the H1 time frame doesn't mean the trend has changed. No, price is just taking a retracement. I repeat, the fact that there is a break of structure or price has broken structure on the H1 time frame doesn't mean the trend has changed. No, it just means price is retracing. Do you all get it? Behind your mind that the H4 is our overall trend. Alright, the trend on the H4 is bullish. That's our overall trend. So anything that happens on the lower time frame doesn't really affect the higher time frame trend. Okay, till the higher time frame trend changes, we are still bullish. Do you get it? Good. So after price broke or after price created this higher high, what did it do next? It came down, created this lower high, this H1 lower high. And what did it do? It finally broke our H1 higher low. So after it finally broke our H1 higher low, what did I wait for? I waited for a break of structure above this H1's lower high. That's what I waited for. What did I say I did? I waited for the break of the H1's lower high. Okay, but before price broke above this H1's lower high, what did it do? It came up and created what? A higher low before it finally broke with a higher high. What did I say? Before price finally broke above the H1's lower high, what did it do? It created a higher low and finally broke above the H1's lower high. Okay, so when that happened, or when price finally broke above the H1's lower high, that was a confirmation that price is about to go to the upside, or the H1's trend is the same as the H4's trend, or right now they are correlated. Both the H1 and the H4 trends are correlated. They are on the same direction. Okay, so after that happened, what did I do? Came back to my rectangular tool or my rectangle tool and marked this zone as my new resistance. Okay, and marked this zone as my new resistance. Okay, so this becomes our new lower high. Sorry, this becomes our new higher low, and this becomes our new what? Higher high. So after price created this higher high, what did I do? I took my Fibonacci tool and drew from point A, dragged to point B. And what did I do next? I waited for price to come back to retest the resistance, which was also in confluence with our golden zone, which is the 50 and the 61.8% Fibonacci level. Okay, so after price came into that zone, what happened? What was I looking for? I was looking for a weakness in momentum. And when I say weakness in momentum, I mean this short candlesticks right here. Okay, that was what I was looking for. So first of all, I was looking for a weakness in momentum, which also caused, some kind of rejections, because we have this first rejection right here, this second rejection, this third rejection. Okay, so first of all, we look for a weakness in momentum. Second, we look for rejections, and third, we look for a change in momentum or a bullish momentum. Okay, or a candlestick confirmation pattern. Okay, so looking at those candlesticks at the resistance or in our golden zone, what can we see? We could see a shift in momentum, or we can say we saw a morning star candlestick form. Why do I say a morning star? Because we have this bearish candlestick right here. Let me zoom in for you all to see. We have this bearish candlestick right here. We have this doji formed next, and this bullish candle formed. So this 1, 2, 3 candlesticks formed a morning star candlestick pattern. Okay, so after the closure of this bullish candlestick, what did I do? That's where I enter my trade. I enter my trade right here, put my stop loss below this bullish wick. My take profit right at the 0% level. My second take profit at my negative 27% extension, and my third take profit at my negative 61.8% extension. Okay, which gives us a 1:3 risk to reward ratio, risking a cool 50 pips to make 167 pips. Do you all get it? Good. So after our take profit was hit, or after I won this trade, what did I do next? I went back to my H4 time frame. Okay, let me clear the chart so it becomes clear for you all. Good. So after I came to my H4 time frame, what did I realize? I realized price continued back to the upside and created a new higher high, meaning it broke its previous higher high. Do you understand? So now this becomes a confirmed, this higher low right here becomes a confirmed higher low, because it created this higher low was the low that led to this higher high. Okay, good. So after price created this higher high right here, what did I do next? I marked this zone again as my resistance. I marked its previous higher high as my resistance, waiting for price to come back and retest. Okay, so after I marked price, after I marked it as my resistance, sorry, what did I do next? I went back to my H1 time frame. Bro, I wasn't about to sit here and wait for days for the retracement or wait for hours for the retracement to happen, because each candlestick here takes 4 hours to complete. Alright, so you are probably going to wait for 2 days or a day for the retracement to happen. I'm not about to do that, bruh. So all what I did was to go to my H1 time frame and catch the retracement. Man, this part of the video is to teach you how to catch the retracement of a trend. Okay, so after I came to my H1 time frame, what did I do? Or what do I realize? I realized this was our last higher low price created before it broke above its previous higher high and created this new higher high. Okay, so when price created this high, what did I do? All what I did was to mark this high with my rectangle tool. I just marked it as my rectangle tool. Okay, so as I marked it, behind my mind or in my mind, all what I was thinking was, if price is to come down and break above this high, it means the retracement isn't going to happen right now, or price isn't ready to retrace. Okay, so you are still going to create a higher low, a higher high, and still rally back to the upside. But when price came into this zone, one thing I realized was, as price was approaching the zone, we realized a rejection. First rejection, second rejection, and it finally got into the zone. But when it finally got into the zone, what was the next candlestick that printed? A bearish engulfing candlestick. A bearish engulfing candlestick. Why? Because the closure of this red candlestick was below the start or the opening of this black candle. So that told me, or that showed me at that point, sellers were in the market. So did I go ahead to take the trade? No, it was too early. I waited for what price would do next. So while waiting, I realized price tried to go, or price tried to close above the wick of this previous high, but it failed and closed back into the zone. It didn't even close above this bearish candlestick, but it closed midway. Was that enough for me? No. I waited for price to do its thing, and I realized this small candlesticks being printed. There's small candlesticks, right? 1, 2, 3, 4 being printed. That was when I knew the bullish momentum, so it wasn't enough to close above this wick. Okay, so the next thing I was waiting for was a shift in momentum, a bearish shift in momentum. Okay, so lo and behold, it happened. Price gave us this bearish candlestick right here. That told me now sellers are in the market. What even gave me the confidence was the volume of this bearish candlestick. See how it closed. It closed with a lot of bearish momentum. Why? Because you can't even see the wick that the bulls created. Okay, so with this candlestick, we can say there's a full size candlestick, or this was a close to, or this is even a Mirabozu, bearish Mirabozu candlestick. If you don't understand what a Mirabozu is, go to Google and type a Mirabozu candlestick. It's a candlestick with full momentum or full volume. Okay, its wick isn't really clear, meaning there was full volume. Okay, that was the confirmation price gave me that we were about to drop. So after I had that confirmation, all what I did was to enter my trade here right after the closure of the bearish candlestick, and my take profit right on top of this wick. Okay, and my take profit was our previous resistance, or our resistance, sorry, which is our previous higher high. Okay, that was where my first take profit was going to be. Okay, and my second take profit was our H4 higher low. In case price broke through our resistance, I'll be looking to target my H4 higher low as my next take profit. Okay, good. So that was my second take profit, which gives us a 1:6.17 risk to reward ratio, risking 47 pips to make 293 pips, almost 300 pips on GBP USD alone, man, for this week. Just on one trade, bro. You can pass your funding challenge with this strategy. I promise you can pass your funding challenge with my strategy in less than 2-3 days. For real talk. All what you need to do is to master this strategy and just apply it. But when I say master, it means you watch my videos and you go back to your charts and backtest. You backtest every single day. You don't backtest today, then come back and backtest 5 days later. You backtest every single day to understand what you're doing, to understand market flow. Okay, this is simple. Forex is easy. Forex is simple, man. Go back, watch my old videos, watch this video also to understand what I've been doing, bro. All what I do, this is what I've been preaching in my previous videos. Same thing, nothing changes, same thing, bro. This is what I've been doing over the years, and it has made me profitable. That's why I'm here today sharing this with y'all. But before you click off this video, don't forget to subscribe, like, leave a comment down below on what topics y'all want me to tackle. And in case you want to ask me any questions, I'll leave my Instagram link in the description below. So feel free to hit me up or to DM me on Instagram with your questions. Alright? So with that being said, see you in the next video. Charon FX. I'm out. Peace.